A few months ago, I discussed two companies from data center theme that are making a lot of buzz, HFCL and Sterlite Technology. In that video, I discussed the business model of both companies. Then I covered the opportunity from data center due to massive demand for optical fiber cable. And I also highlighted the biggest risk, that optical fiber is largely a commoditized business. Since then, both stocks have continued to rally. Now, if you haven't watched that video but interested in HFCL and Sterlite, I would recommend watching that video first. Now, interestingly, in last 2 days after Q1 result, HFCL share price has almost hit back-to-back to low circuit of 5%. But if you look at the numbers, it's mind-blowing. HFCL revenue has jumped 120% year-on-year, EBITDA has jumped nearly 15 times from 28 crore to 414 crore, and net profits have grown from loss of 29 crore to now at 246 crore. In fact, after the result, management conducted the con call and sounded super bullish, and they actually increased the FY27 growth guidance from 20% to 40%. Not only that, they're guiding for minimum EBITDA margin of at least 23.25%, which is again much higher than their initial projection of 20%. And please note that in FY26, their EBITDA margin was 15%. So if we simply do the calculation, FY27 revenue is projected at around 7,000 crore and EBITDA expected at 1645 crore. That's more than 2 times growth projection from FY26 EBITDA of 762 crore. The crazy part is order book. It stands at 26,600 crore, which is more than 5 times their FY26 revenue. Now, in spite of such growth numbers, the street does not look much excited post-result and HFCL share price has corrected. Now, what explains that? Well, I could think of 2-3 reasons. First reason is stock has already rallied significantly. In fact, from March lows, stock has already jumped 3 times. So a lot of positive news from result was already priced in. Then second reason is weak market sentiment. After the latest US-Iran escalation, crude oil prices are again touching $100 mark and USD is again near all-time high against INR. This is not a good sign for Indian market, and hence the overall Indian market is quite weak in last few trading sessions. So it looks like people are booking profit. And let's not forget that HFCL is still a commoditized business. So the biggest question could be, how sustainable is management growth guidance for FY27? And what about FY28 and beyond? Interestingly, in June quarter, both DIs and FIs have increased stake in HFCL. FIs have doubled their stake from 7 to 15% and also include reputed firm like Small Cap World Fund. DI holding is also up from 8.5 to 10.9%. But it includes only Quant with nearly 7.7% holding and Reliance Venture. And public holding has reduced by 11%. On the other side, Sterlite Technology has also reported massive Q1 result. Its sales are up 87% year-on-year and profit has jumped nearly 20 times from 10 crore to 197 crore. Company's order book now stands at 18,600 crore, which is more than 4 times company's FY26 sales. In fact, Sterlite Technology has also upgraded its FY27 EBITDA margin guidance to 23%. Earlier target was 20%. In FY26, company's margins stood at 12%. So margins are going to expand big time in FY27. However, the catch is its stock price has already jumped more than 7 times from January 26 level. Although there is a slight correction, but overall the stock has already been re-rated before the results actually arrive. Here also both FIs and DIs have increased stake during June quarter. FI stake is up from 14.4 to 18% and DI stake is also up slightly. Interestingly, it's also showing July shareholding where both DI and FI have again increased some stake, but promoter holding has slightly reduced. The big question here is, what should you do now? See, there's no doubt that both HFCL and Sterlite are benefiting from data center theme massively. The industry is witnessing a strong demand cycle and both companies are executing well. But the real question is, how much of this good news is already priced into the stock and how much upside is still left? Honestly, that's a very tricky question and I guess nobody would have a right answer for this question at this point in time. That is why I believe both these stocks are suitable only if you have a very high risk-taking appetite. More importantly, if you invest in such cyclical business, timing your exit becomes just as important as timing your entry. Please note that current growth won't continue forever. It's been driven by unusual strong demand for optic fiber cable and higher fiber prices are also supporting profitability. And this cycle would eventually turn. So FY27 clearly looks very promising, but if demand cools, or let's say fiber prices start falling, then earning growth can slow down very quickly. And by the time slowdown becomes visible in quarter results, smart money would have already started exiting and stock price could correct sharply before most retail investors even realize what has changed. And we have seen it in the past also. Many retailers get trapped after they end up investing at very high level. So this video was not to give any buy or sell call on any of the company. I just wanted to discuss the result and inform you that before taking any decision, keep both opportunity and risk in mind. Like I said, it's a risky bet. Both are momentum stocks and posting extraordinary result. But only time will tell if the momentum would sustain or not. So that was a quick update on both the companies. Now tell me in the comment, is it worth taking a shot in both companies at current level? Or do you think that probably majority of growth is already factored in? And as the Q1 result season continues, I am closely tracking the result and management commentary of nearly 200 companies. If you would like to follow those updates in detail, you can explore the join button of our channel or explore my website. I'll see you in the next video. Till then, take care.